Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures getting a lift thanks to the AI trade and solid earnings. We're looking at a higher open. Chip-making giant Taiwan Semiconductor posting record profit overnight and raising its 2025 outlook for the second time this year. The company's chairman saying on the earnings call that, quote, AI demand is stronger than we thought 3 months ago. The results are helping lift other key names in the chip space this morning, including Nvidia and Broadcom. Plus, oil prices are rising this morning after President Trump said that India has promised to stop importing Russian oil. Indian officials have not yet confirmed that move. Trump also saying he's pushing China to stop as well, as Washington tries to cut off Russian energy revenue as part of the effort to end the war in Ukraine. And United Airlines shares under a bit of pressure after reporting mixed third quarter results. The company noting it increased capacity in the quarter as its rivals cut back. United did post a strong fourth quarter profit outlook, coming in above analyst expectations. Let's get a check in on stock futures here this morning. All three major averages indicating a higher open. In the case of the Dow, the smallest of the three in terms of gains, about a 0.2% gain pointed to for the open, twice that for the S&P 500, and the NASDAQ pointing to the biggest gain at the open, about 0.2%. Let's dig into our top stories of the day now. Stocks rising on AI optimism after Taiwan Semiconductor reports a blowout quarter. United Airlines issuing a strong forecast for the holiday travel season. Plus, Fed Governor Christopher Waller offering fresh commentary ahead of the Federal Reserve meeting this month. Joining me now on all of this, senior reporter Ali Cannell live at the NASDAQ, senior autos reporter Pras Subramanian, and Federal Reserve correspondent Jennifer Schonberger. Ali, going to start with you here and on this sort of back and forth AI trade. It's on, it's off. Today it's on.
Today it's on, lifting the broader indexes like you were just mentioning, Julie, in futures trading, but also the broader semiconductor space. Taiwan Semiconductor outperforming on earnings. We'll get into those in just a second. But I'm taking a look at TSM shares up over 2% in early trading. You have Broadcom, Nvidia up around 1.5%. ASML also up 2%. So really this broad-based rally thanks to those results. And that's really been the theme that we've been seeing across the AI space as we get these headlines of money continuing to pour in. Google is spending $15 billion to build its largest data center outside of the U.S. We have OpenAI expanding its partnerships with a slew of AI heavyweights. That includes names like Nvidia, AMD, Broadcom, Oracle, and even Walmart. We also had another deal this week between AMD and Oracle, and this is fueling what Wall Street has really described as this self-funding AI investment cycle, this circular flow of money. And that is what's leading to some analysts to say that we could potentially be entering bubble territory. Perhaps we're already in an AI bubble. JP Morgan CEO Jamie Dimon earlier this week warned that a lot of assets are entering that bubble-like environment. And Bank of America's latest fund manager survey also flagged that an AI equity bubble is the top risk for investors at the moment. This is the first time in the survey's history that we've seen that. Still, the concentrated stock market that we're in points to investors still liking this AI trade, at least for the moment, and despite those growing warnings that we are entering a bubble.
But on the flip side, Taiwan Semiconductor is pretty extraordinary in that they raised their forecast a few months ago, but now they're saying it's even stronger. The demand is even stronger than we thought just 3 months ago.
Demand even stronger. Again, the second time they're raising this outlook. Record third quarter profits. The chip maker is a key supplier to Apple and Nvidia. So it's a big name in this space. And it now expects 2025 revenue to grow in the mid 30% range. That's up from prior guidance and comes after a 39% jump in net income last quarter. The CEO is saying that conviction in the AI megatrend is strengthening with demand even stronger than expected 3 months ago. And it does show, if you take a look at a longer term stock price, as shares have added more than $260 billion since its last outlook raise. And the company now plans to spend at least $40 billion when it comes to expanding capacity next year. And part of that build out is going to include pursuing a second large land acquisition in Arizona to further boost U.S. production, which we know the Trump administration has been pushing for across all of these major chip players.
Okay, so that's what's going on in the AI trade, but then we also have what's going on in the airline trade. And for that, Pras, give us some of the headlines here on United and what we heard from them.
Yeah, it was a slight revenue miss here, 15.2 billion versus 15.28, so not much there, but still up 3% year over year. EPS was a beat as well. Julie, you mentioned guidance, Q4 guidance at $3 and $3.50. Better, that range better than expected, than what the Bloomberg consensus was. But United said it would address its full year guidance on the call later today, which last quarter they said that would be an EPS range of $9 to $11. So what does that imply here? We'll see. But turning to Q3 again, premium segment doing quite well. That cabin revenue rose 6% year over year. Basic economy also rising 4% year over year, which is interesting there. And loyalty revenue up 9%. Very important there. You're talking about all your United what they call it, mileage select, I think, and then also you're talking about rewards cards, things like that. Credit card remuneration. This is where Delta saw a lot of growth last quarter too.
And then, Pras, selfishly, this next question is for me, but it's also very important to United's business. I'm talking about the situation at Newark Airport, one of its biggest hubs.
Right, you're talking about earlier this spring when we saw, staffing shortages and air traffic control issues, even air traffic control outages that caused serious delays, and also outages while planes were in the sky. So people were afraid to fly out of Newark, and this is a big problem because United's one of the biggest hubs. United said last month that Newark flights matched LaGuardia and JFK with regards to on-time performance. Is that saying a lot? I'm not sure, but apparently Newark is back sort of on track. We want to hear more about that on the call coming at 10:30 today Eastern. But also, we're in the middle of a government shutdown, right? Air traffic controllers are actually a lot of them are calling out sick. There's not enough people there. We saw some shutdowns, or we saw some issues at Burbank Airport in LA and also in Nashville. Want to hear more about what Scott Kirby, CEO of United, says about that. Last week, we saw Ed Batchen saying that if this shutdown continues longer than it has, that could be some serious consequences there for on-flight performance and things like that.
Yeah, most definitely. We'll be looking for any commentary on that around the call, as well as perhaps a new update to the annual forecast. We'll see if we get that, Pras. And then, Jennifer, got to talk about Christopher Waller and his comments this morning, especially since he is reportedly on that short list for next Fed chair.
Absolutely, Julie. Fed Governor Waller in favor of another 25 basis point rate cut at the end of the month. But after that, he wants to take a cautious stance, implying that he could be in favor of holding rates steady until he gets more clarity on the job market and the economy. He says that right now, when he looks at the data, they are in conflict, showing a weaker job market, but a still strong economy. He said in his speech this morning, quote, "Something's got to give. Either economic growth softens to match a soft labor market, or the labor market rebounds to match a stronger economic growth." He said, "Since we don't know which way the data will break on this conflict, we need to move with care when adjusting the policy rate to ensure we don't make a mistake that will be costly to correct." And of course, the government shutdown is complicating matters, right? We did not get that September jobs report, nor have we gotten retail sales. We're going to get CPI inflation data, though that will be late. We'll get that next week. But in the absence of that data, Waller said he has been placing greater emphasis on private sector data and talking to contacts on the ground. And from that lens, he says that the job market has deteriorated over the past month, even as consumer spending has held up. So that sort of underscores the conundrum that he sees right now. But I will say that these comments are particularly interesting because Waller came out in the middle of the summer really as the Fed's leading dove in favor of rate cuts. And he is now sort of coming back a bit from the trajectory, right? The median is for 2 more rate cuts this year. He's saying, yes, let's go ahead with a rate cut at the end of this month. But then he's sort of saying, maybe we wait and see. And it's interesting because he is, as you said, on the short list to be the next Federal Reserve chair. Now, contrast that with the newest Fed governor, Stephen Miron, who is out this morning calling for a 50 basis point rate cut at the next policy meeting. Not a surprise there. He dissented at the last policy meeting on this very issue. But now he says renewed trade tensions have increased risks to the economic outlook. So it's interesting to see some of the tension here, who is becoming less dovish, who is remaining dovish. And I think it underscores that Myron is sort of the outlier, and that while the market is expecting a total of 3 rate cuts this year, so another rate cut at the end of this month and in December, perhaps that December rate cut now not necessarily a slam dunk given Waller's comments.
Ali, Prost, Jennifer, thanks so much. Coming up on Morning Brief, we're going to bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Time for some of today's trending tickers. We are watching Nestle, Salesforce, and Charles Schwab. First up is Nestle. Its shares are up roughly 8% after it reported a rebound in sales and unveiled plans to cut 16,000 jobs. Now, that earnings outperformance was driven by price hikes in the coffee and candy businesses. Nestle's best known for brands like Kit Kat and Nespresso. It's on track for its largest one-day gain since 2008. The company's CEO is looking to accelerate its turnaround, saying Nestle needs to change faster than the world is changing. Next up is Salesforce, the software giant rising ahead of the open after raising its outlook for the next few years. The company is saying it expects to see revenue of more than $60 billion in 2030. That's ahead of expectations. The guidance does not include impact from the pending acquisition of Informatica. This announcement, by the way, coming at Salesforce's annual Dreamforce conference. And finally, we've got Charles Schwab. That stock jumping after earnings and revenue beat Wall Street's expectations. A key metric for Schwab, total client assets up 17% year over year to a record $11.6 trillion. Net interest margin expanding by 21 basis points to 2.86%. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, Taiwan Semiconductor raised its guidance for the full year, expecting revenue growth in the mid-30% range and raising the low end of its capex range to $40 billion. This comes amid a wave of AI deals that have fueled concerns that a tech bubble may be forming. Joining us now, Peter Chair, Academy Securities Head of Macro Strategy. Peter, we've seen obviously this back and forth on AI trade. Is it a bubble? Is it not a bubble? What does it mean for the overall market? Where do you come out on all of this?
I am a little bit worried that it's being overbuilt. What I'm kind of going after now is, okay, if it is working, we should see some secondary effects. We should see that. And I keep coming back to the problem that we probably don't have enough electricity. So I want to invest right now in the things that are going to be needed by the data centers, needed by the AI. So, a lot of what Trump, I think, is doing in the administration, we've been calling it production for security. Those are the trades I want to own. I want to own small caps. I want to own mining stocks. I want to own refiners. I want to own logistics companies, because I think that is the beneficiary of all this.
I want to pick up on one of those things you were saying, and that's small caps, which is an interesting theme. We see the Russell 2000 now matching the other major averages when they hit records. At the same time, there's also rising concern about a bubble in some small caps, particularly ones that don't make any money. So when you say small caps, like, how do you screen in small caps
so
right now?
I would say right now what we're looking predominantly is things that we think the administration might care in, because that seems to be the impetus for some of these stocks to take off. So we're looking at the rare earths and critical minerals, and I think they have to be domestic, maybe Canadian. I don't think you want to own a lot of foreign, based small caps or anything that has their rights foreign. I think you want to look at the production and refining. You're starting to look, I think, at biotech. Where could this administration decide they want to put some money in to jumpstart things? Because I think you get 3 things with the administration. 1, you get their money. 2, potential government spending. 3, they've been kind of encouraging lending to those companies, so you get growth from that. And I think you kind of get this almost need to do business with these companies. So I think there's a lot of opportunities there. We have rate cuts coming, so I think that's going to benefit small caps as well. And so that's why I'm not sure what to do with the Mag 7. Maybe they go higher, maybe not. I think there's much more value and promise right now in these kind of smaller caps and in these various industries. I love nuclear, and weirdly, I'm sad to say it, I'm scared to say it, maybe I like solar.
Why are you scared to say that you like solar?
Well, because everyone hates solar, and solar is clearly has not been treated favorably by the president. I think whenever the president talks about energy, he's very focused on clean coal. I think they're moving towards nuclear. You're seeing, I think, deregulation that will allow the nuclear plants to grow, so that's going to be a huge winner. But I think he's also being advised that, hey, you might hate solar, but it's probably the single best way to get up and running in the next 3 to 5 years. If we want to put some baseline on as we build out coal, nuclear, solar is going to win, and Trump is willing to pivot. He might hate it today, but I think he can come up with reasons, and he does listen to his advisors.
Well, and if that's where people want to put their money in terms of invest, if people need that energy and they're putting money there, it'll follow that to some extent. On the nuclear front, I mean, some of those plays are also very speculative. Sure, we have the big energy companies that already own nuclear assets, right? But then you have the small modular reactor companies that don't actually make anything yet and won't for the next few years. Do you also, make a bet on those?
So I think you can make a small bet on those. One thing, one of our retired generals, General Waddell, he has spoken around on the Department of Energy website. There are 70 nuclear projects, in approvals that have been approved, but only one has the regulatory approval. I think that's going to accelerate, and we're going to see a lot more of those. The U.S. Army just announced that they're actually going to put small nuclear reactors on some of their base. So I think you're going to see growth there. I think I like the need for uranium, but I also do think you're right to, invest in some of the big people, right? I always think the energy companies of the future are often the energy companies of today. They have thousands of PhDs who've been excellent at extracting energy from this planet, and how they do it is shifting, and I think they will embrace and figure out nuclear as well. So I think you want to be kind of across the board in big caps, and what I like about the utilities and even big energy, they're clearly not overbought. In fact, some are underweight. So I don't think you have that bubble risk. If I'm wrong on my thesis, maybe you go down a little bit. If I right on my thesis, you get maybe 20, 30, 40% gains in the big caps and doubles and triples in your kind of lottery picks, knowing that one or two are probably going to go awful.
And Peter, you mentioned the general, and this is a good opportunity to remind folks who are watching, if they're not familiar with Academy Securities, you guys cater to that veterans community. You've got members of the military, ex-members of the military who are advisors to the company. And so coming back to something else you mentioned, production for security, or ProSec as you're calling it, as sort of an underlying thesis for a lot of the other things that you're talking about. Explain that a little bit more.
So I think, what they're looking at, and we're saying, what are the kind of pitfalls that we have that we can't make enough of on our own, that we really, really need to? I'm not talking about stocks, who really cares about that necessarily. It's going to be chips, right? We need to make our own chips. We need the rare earths and critical minerals, and not just the rare earths and critical minerals. Those we can buy, I think, in the market. We need to process and refine them. I think you're seeing some of this action occur in steel, where we got involved in U.S. Steel. The government got involved. I think you're going to see them look for champions in other industries. So I think anything that you think about that, hey, if someone turned this off to us and we couldn't get it, how bad off are we? And I think that's kind of the definition of security. So not necessarily military security in the traditional sense, but security for the things that we need to grow and
supply chain security effectively.
And so it's going to be very focused on those things: chips, critical, electricity, right? If we want to win in AI, we need electricity and chips. So that becomes a national security risk. And that's where I think this government's turning. You saw announcements by JP Morgan the other day that they're upping their investment. I think this almost becomes the new ESG, where everyone adopted ESG as kind of a mantra, and I think this will be a shift or an evolution in that. We're like, okay, but we have to take sustainable to mean maybe a tougher definition of sustainable. Like, can I survive without this? If the answer is no, we need to make or produce this or procure this, either ourselves or with our very close allies. And I think this could actually be a very long-running investment theme, because so many of these areas are underinvested, right? A lot of the banks didn't want to invest in some of these areas. Nuclear is very unpopular. So although they've had these big gains, if I'm right, we're maybe only first two batters in a 9-inning game have come to the plate.
Really interesting stuff. Peter, it's great to see you.
Great to see you too.
Thanks for coming in. Coming up on Yahoo Finance Opening Bid, executive editor Brian Sazzi is back, and he's joining us now to give us a little taste, a little preview. What's coming up?
I'm back here physically. Not sure if I'm back mentally, Julie, but nonetheless, I got a lot of AI talk on tap. Looking forward to catching up with DocuSign CEO Alan Tigerson, who I saw over at Dreamforce. So look, we'll talk about the future of software with him, and the AI trade, Julie. Software stocks getting shredded this year. Not good, Julie.
And you got like a Steve Jobs vibe going on today.
Yeah, I'm feeling it. The team told me I look like a spy. I'm not, but I'm feeling the vibe. Maybe look a little James Bond. I dig it. It's good to be home, Julie. It's good to see you.
Either one, all of the above. Yeah. Thanks, Saz. Looking forward to it. That does it for Morning Brief. Opening Bid is coming up.